All right, welcome everyone. Welcome to the live. Not, I was gonna say the livers, but we're the 5ers Live Trading Room. All right, so as you can see, I got a new setup here. I'm it's a bit messy. I'm kind of moving around in my office here, changing some stuff over. I order a new camera. So I got new angle on this one. Kind of trying to change things up here a little bit. Hoping that the new webcam is going to come in. I'm here to probably get here tomorrow, so I'll get that set up. So you'll have to watch me from this angle today, I'm afraid. All right, Victor, how's your weekend been, and your trading?
Hello, everyone. A new beginning, a new chance to make this day a a day well executed. I hope you're doing well, everyone. Yes, we have. I'm excited for today's
Yeah.
guest. We have Tom,
Today we got Tom,
the
the one and only, the
trader.
one and
Yes.
only OTE trader, our favorite ICT trader. I'm going to bring him on right now. Welcome, Tom. How's it going? We can hear you. I think you're muted.
Hold on, I was
Let's
muted.
get that fixed. All right.
I'm good, man. Thank you. How are you guys?
I'm good, man. I'm good. I'm very excited about this one. I sent you a message last week. And I'm like, yeah, it's gonna be fun to have you on because I figured today we want to do some more, kind of like I want to see you, go through the market live, see if we can find anything here together. And I'm also, very interested to see if your ICT analysis, we can find some confidence here with, excuse me, with what me and Victor is doing.
Yeah, for sure, man. I mean, London has already gave me plenty today.
Nice.
So yeah, I was looking for
Nice.
more for New York, but it doesn't seem like I will get an entry. But I'm focused
We'll
on
see.
USD, and yeah, we can look at that in a bit.
Yeah, I've been so busy trying, getting the new office set up and camera and everything. So I haven't actually been able to look at the charts today. I'm going to do that during this live session here. What's up, Louis? Always in here in the live stream. Definitely, I very much appreciate you, man, and Evans as well. We got a lot of OGs here
Regulars.
in the chat. Victor, have you been finding any trades today?
No, I didn't have any trades, not in my main strategy in any case. Euro has been having a very nice move, I would say. If you already had your signal, it had like a very good follow through, breaking all those bullish order blocks from previous sessions. It would have hit. I didn't get a last week. I didn't get the signal, but it would have hit my TP if I had a swing signal. So that's a good. Sometimes the strategy, you have a target, and sometimes it goes to that target without the signal, which still is a little bit of a bummer because it didn't give you a chance, but it feels kind of good because it did go the direction, and it reached the target that it hadn't planned, or at least you thought it would go. So that's good. But I haven't had any entries, so I'm looking at it. EU is currently beyond its daily ATR, if I'm not mistaken. Yes, which the ATR is a little bit compressed from previous days, having less volatility. So that is something to remark. We are now expanding again in terms of volatility, and that usually can be tricky, but it usually more volatility means more opportunity. So if it is expanding, that is usually when and not always, but usually that is when it's getting ready to move and make another impulsive move, right? So if you can catch that move, you're in a good position to capture a lot of pips. So let's see. I haven't had any signals today, but I am I'm ready to capture when anything that comes my way.
Right. I think what everyone wants to see here is Tom. You mentioned that London Open has given you plenty of opportunities today. Maybe we can just take a look at that right away. See if we can break down some of those trades because you've entered a couple of positions this morning. I believe.
Yeah, I was in GBP USD sales from around 128.75, so around the high of the day. Let me see if I can share my screen as well. Maybe we can look at it later, but yeah,
we can take a look at the trades right now, I believe. Put up.
Oh yeah, I can see the screen. All right. Yeah, today, typically what I like to do, we use 12 a.m. EST as our opening price for the day. That's where the algorithm starts working with ICT concepts, so we can determine our daily profiles and such. My favorite daily profile is a classic buy or sell day, which requires that we go above New York midnight opening, which we did not do today. So technically, it's not a classic sell day, but because Asia session ran buy-side liquidity over here, and then it started to break down already at 12 a.m. EST, I was pretty confident that this will just run down lower. And if we look at the higher time frame as well, I marked this out. I posted this on Twitter as well for a breakdown. We were on buy side of the curve over here on this area. So when we trade a market maker model, we want to see on what side of the curve are we on. Over here, we have an original consolidation, which always starts with the market maker model. Then price expands up higher, and then it reaccumulates over here, and then runs this high. Now we have a smart money reversal, as we call it, with the market maker model. So now we're flipping into sell side of the curve. Now, once we disrespect bullish order blocks like this one, for me, buy side of the curve is done, and we are going into sell side of the curve. Now we have this old area, which is also a bullish order block. But this is also where the old buying happened. So the buy orders were pushed up higher here, and this same area will be used to accumulate shorts. So this is what we can see over here. We're starting to form up close candles, which are in essence bearish order blocks, right? So in the same area as it formed a bullish order block. So now we have sell side of the curve over here, and we had a continuation purge here, which means we run a short-term high and then we displace lower. That's the higher time frame narrative. So now we know, okay, now we only need to look for sell setups until we reach our terminus, or that's our sell side liquidity target, right? If we go into the lower time frame on the 1 hour, we had some SMT. I talked about SMT in the previous stream as well, right? The cracking correlation between two markets. So Euro USD and GBP USD are closely correlated. Over here we had SMT, which means this high took out this high on Euro USD, but not on GBP USD. So that means we have SMT. Now, SMT is only valid once there's a break of structure and a change in the state of delivery, which means it needs to break down lower to confirm that SMT. And now we can look for setups, right? So Friday, and actually the entire week on DXY was kind of terrible last week, if you guys agree, right? We had this entire sideways price action, which was pretty hard to deal with. But if you use relative strength analysis, which we can do on Euro GBP, which is the euro against the pound, obviously. So if the euro GBP goes bullish, we can anticipate a weak pound, which will help in GBP USD sells rather than selling Euro USD. And that's why Euro USD also went down lower faster than Euro USD, right? So when I looked at it this morning during London session, we ran that Asia session ran that previous daily high, and then we had a break of structure down here, right? This over here. So we have a break of structure. Now I'm looking for shorts, but what I always want to see is some up close candles so we can have a bearish order block, right? Which formed over here. And I was like, okay, I'm just gonna go in over here. This looks very good for a short. So I entered over here, put my stop loss around here, give it a little bit of breathing room just in case this high wants to run this high one more time. That can happen always. I don't like to put like a very tight stop loss, like 3-4 pips. That's, for me, that's very dangerous. And I basically closed like down here. So it was like a 4 to 5 hour trade. And I actually,
Wow.
Nice.
yeah, I actually banked another payout with the 5ers because of that. I think I made like 5 figures in one session today. So I was
That's pretty good. That's pretty good, man. That's a good morning.
It was a really good morning. Yeah, for sure.
That's good in anyone's book, I think.
Yeah.
Right?
Tom, before I have a bunch of questions, since we don't trade the same way. You intrigue me all the time when you explain all these ICT concepts. So if you don't mind, I would like to I have a couple of questions for you to begin with. You started
course.
with the original consolidation. What is an original consolidation?
Well, when we look at the market maker model, that's what we call it. What you always want to do, you want to know what side of the curve you are on, right? If I had a crude schematic, I don't have it right now, but a crude schematic would be we start off with a consolidation like this, then price expands higher, it accumulates orders, then it runs higher, and then we have a smart money reversal, and then it breaks down lower. Then we have a distribution phase, then it trades lower, another distribution phase, and then we complete the original consolidation. Market maker model always starts off with the original consolidation. So when we have a market maker sell model, it has to be like this. If you had a market maker buy model, for example, then it would be reversed. So we always want to look for these types of market cycles, so to say. And what is always a good rule of thumb, if there is a consolidation, price tends to not reverse from that consolidation. It can run the low, let's say, from a consolidation, but it will always, or it should run higher once it consolidates. Just like over here, right? We have a consolidation over here. If we would have run all the way up here, I would have still been bearish, because that just is inducement for buyers, in my opinion, because we are on sell side of the curve, right? So yeah, that's basically how we use the original consolidation.
All right. So an original consolidation is like the first building block of your model, right? The model you're using.
Yeah, if you look at the higher time frame, you wanna use a market maker model. Yeah, so that's just to determine what side of the curve am I on and what kind of market cycle am I in right now. And then you go to the lower time frame, and then you can start to look for your entry pattern.
And you mentioned another thing. Which side of you have it on the chart as well? Which side of the curve are you? You said buy side and sell side. How do you determine which side is it? I mean, how do you know it's a buy side of the curve? And perhaps more importantly, when do you know when you switch from one side to the other?
That's a very good question, because you can see this happen all the time, and it will stop you out at some point because it's not really forming like it should, So what we gotta figure out is, does the high where it reverses from hit a key level? That is very important. This can be fractalized as well. You can trade this on the 1 minute, on the 5 minute, 1 hour, daily. It goes on all time frames, but what is important, that is the higher time frame hitting that key level. So if I just go over here, let's see. Yeah, we've got a key level over here, right? We run a high over here, because we use an entire matrix of PD arrays. So we have like an old high, an order block, a breaker block, fair value gap, all that kind of stuff. And an old high is also part of the PD array matrix, which is also a key level. So if we run a high, and then it starts to reverse on the lower time frame, now I can say with confidence, okay, this high that we formed here and it starts to break down makes sense, because we took some sort of buy side liquidity, or we hit a higher time frame key level. So now it's higher probability that price will go into sell side of the curve. And in the end, it's all probabilities. It can also not work out. It can still push higher, but the probabilities are in my favor that it will go to sell side.
I see. And how do you, at what moment, let's say in this chart, at what candle will you have the confirmation that you have switched from buy side to the sell side? What do you use? Does it have to take out the first, the last bullish order block, for example?
I prefer to see a bullish array. Yeah, or it can be an order block, it can be a fair value gap. I need to see that disrespected. Now, what also can happen, right? This is a bullish order block over here. This got disrespected, so that's a good sign. But that could also be just a run on the sell side, and then it will reverse again. That's also possible. However, that didn't happen in this occasion. What we have in a market maker sell model is that price will run a high. Let me get an arrow. So it runs a high, then it starts to trade lower, and then it disrespects a bullish order block here. Now, what most of the time also happens is that price returns back into premium of that last leg up, and that would be considered the low risk sell. That's called low risk sell, in my opinion, because you need to put on lower risk because it's not yet confirmed we're going into sell side of the curve. And then once it starts to break down lower, now we have another price leg down, and this is the safest leg to trade from, in my opinion, because now we have a return into premium and then breaks down lower again. So it's showing willingness to go into sell side. So I tend to.
This is, I mean, this is so interesting because this is basically the exact way that that I'm trading. You know, mark out the high time frame levels just like you did here, and then look for a break of structure. Basically, it's really cool how you've. I mean, but this is, you know, market structure, and then if you look at that last the last higher low, like for me, when it I think at no, like at 129.40, yeah, that area exactly, that low. So when price, I think that would be my point that I'm looking at. You know, if price breaks below that level after that rejection, I think that's exactly what you got on as well. You have the and you have that line right where you are on the sell side of the curve, and I think just like you said, when that higher low is broken, it's a very clear sign that we're now in a different trend, we're now in a different market structure. And then you take that with the idea that you've just had a rejection at a high time frame level, it tells us that, you know, price is now about to start that, you know, bigger move, because that's basically what the market does. It moves from higher time frame level to another high time frame level, and we're kind of looking to catch that move from one level to the other. And I think this is the perfect way to do it. You patiently wait for market structure to break. A lot of people would enter on the very first reaction, right? Now that's obviously in this case a good entry, but you know, trend hasn't broken yet. So I think being patient and waiting for that trend to break is exactly what you're doing here, and that's super important.
Yeah, that's what I'm saying, right? This got disrespected, so it's a clear sign it wants to trade lower, but it can always return back to premium first. And then let's say you enter over here, right? And then it decides to go back to premium of the range. You're gonna sit in drawdown for like 30, 40 pips, you know. So you have
and I think it's you know, when you're looking for short, and you have two options, right? You go short when the previous lows are broken, or you go short when there's a new lower high. Now, like the new lower high will always be riskier, but the risk to reward is going to be really good. And like you said, when price gets to that premium, which is, you know, above 15 in your case, you have a really good risk to reward, even down to that low, even down to the where you would confirm the trend.
Yeah, exactly.
So,
and if you enter, let's say, on that lower high, right, then just put on a little bit less risk than usual, you know, because the RR is so good. I know people want to make a lot of money, but capital preservation is the most important part. So don't, because it's a riskier entry, in my opinion, I would tend to do a lower risk entry. And then once it's going lower, then I will look to scale in and then put on the full size, you know, because the RR is so good on that first entry. It doesn't matter if your risk is a little bit lower because of the huge RR it can provide.
Nice. Yeah. Exactly. Capital preservation being the most important thing in trading is a very good point. A fundamental point. Well said. Yeah, I think it's intriguing. I see the market structure that, you know, what you mentioned, that first buy array that was taken out. That is basically, as a viewer pointed out, that is where my neckline would be on the Quasimodo. So that would be the break of structure where the market shifts and tells me that something has changed. The other side has taken control, and now is the time to be looking for that entry if it presents, which is basically, of course, you see it through your own eyes with other tools and identifying different things, not the same things, but there is like a reoccurring theme or template that we both use, and Jonathan as well, but to catch basically the same thing. We're trying to catch the first, the change reversal, right? It reverses, and then we try to catch that at the most optimal, at least in our different, each one in its own different ways, but in our optimal place, right, where you get in, where you put your stops to catch that new trend that is emerging from that break of structure. Very, very interesting.
Yeah.
Tom, I got another. As you know, I'm not too versed in ICT terms, so I just saw a SMT abbreviation on your chart when you were explaining it a little bit before. Remind us again, what is the SMT?
It's called smart money technique or smart money
Okay.
tool, whatever you want to call it, right? Basically, it's a Kraken correlation. So if I split my screen right over here, I will put GU and EU on the chart. So you've got EU over here. Yes, right. So we've got this high over here. All right. So let me just put on some circles. It's a little bit easier to see. If I put here a circle and then I put a circle here, these are the exact same highs as, let me see, over here and then over here, right? Whatever happens over here obviously is for another day, but in this current area over here, if you're looking for sells, you want to, let me see, it's this high, my bad. Almost got it wrong. Otherwise, it's not a Kraken correlation. If they're the same, it needs to be one needs to take out the high, and the other one needs to doesn't need to take out the high, right? So over here we got that SMT. So this high does not take out this high. Then we have this high over here taking out, getting taken out by this high. So now we have a Kraken correlation, which means smart money is in play. So they're trying to move the market in one direction, and this is only what you need to look for when you're selling. It doesn't really matter if this happens when you're bullish, because it will just be lacking, because the other one will take out this high eventually if it's in a bullish market profile. So SMT for me is very important in my trading, because it indicates it's going to be a high probability continuation or a high probability smart money reversal. So yeah.
So basically, what you describe or what you're telling us is that you're trying to compare EU and GU and see which one is weaker, right? So relativeness, weakness, because they both are dollar pairs. So and that wouldn't change. That's the constant. The variable will be the EU or GU, and you're trying to spot relative weakness, right? Which one is most likely to go that direction that you want to be. So you already have a sell, right? The direction. This is only to choose which one of the two you would likely you have a better probability in trading, right? Getting TP.
Yeah, and typically the one that does not take out the high will be weaker, as it has no force or not enough force to take out the high. We can actually see that with GU. Obviously, the GU went down way easier than EU. However, it needs to go back in sync again after it cracks the correlation, right? So they both need to go down after this happens. Otherwise, it could be a decoupled market. And what do I mean by that is that it's lower probability conditions, because everything is just moving wherever without a real like structure and anything. So after a cracking correlation, this SMT happens, you really need to see the market go in the same direction on both of them. And I don't want to see this chart go higher and higher and higher while this one hangs around here and slowly goes lower. Makes it a little bit harder to trade.
I see. So you basically want to see them get in sync again after the crack, the cracking correlation. I see. Very, very nice. Very good. Great. And you mentioned something that you only want to see that cracking correlations when you're selling. But how do you do it when you're buying? Do you look for the lower, not in the tops, but the lower, higher low or lower low? That's the
yeah, exactly. So what I would do is, like, if I was looking for buys, then I want this low and this low, that I want to see the crack there. So I want to see Euro USD go down here, and then this one stay here. So we have confirmation that we have SMT over here, and then if it starts to respect the bullish arrays, like it's doing right now, it's going bullish here from this bullish fair value gap. And if we look at EU, actually, it took out a low, right? So we actually have SMT on the lows right now. So if you were looking for buys, this is kind of a good sign if you want to be a buyer. Now, long term, I'm not bullish on this, so I will not look for a buy, obviously, because of the higher time frame. That's why I'm looking for us to go into the breaker here, and then I want to see SMT happen over here, and then I will look for another short, right? So the higher time frame is important. The SMT can happen everywhere, but it needs to fit with the higher time frame.
I understand. It has to be in confluence with the other tools and other analysis you have.
Yeah.
So in this case, the SMT is telling us that GU is stronger, right? Because of the Kraken in correlation favoring a buy on GU, but it doesn't fit with the overall higher time frame, so it's not something you're too interested in it.
No, but
I noticed.
You could trade it, but then I would
Okay.
just take profit in this area. I would not hold for the highs or anything like that. It would be like against order flow. So you need to cut the trade quicker than letting it run.
Basically, it's a counter trend move. So you have to not, hold it, but just FTA to the next trouble area.
Yeah, you go from discount to premium. In premium, you sell, and then it's done.
Nice.
Yeah.
Another thing, I see you have their breaker, and you mentioned that a couple of times. What is a breaker for everyone who is not familiar with that term?
Breaker is part of the PD array matrix from ICT. So he has like old high, an order block, breaker block, mitigation block, fair value gap. So these are all areas or levels we can use as a key level to trade from. Obviously, if you have a breaker, what you want to see is one price leg up, which takes out buy side liquidity in this occasion. So it needs to take out liquidity, and then the leg that goes down needs to break below this low down here. This is important. Now it's a breaker because we took out buy side liquidity, and then we're breaking down lower. So this is a breaker. So for me, this range should be confirmed for another sell-off if it goes back into premium. And the same case goes for a bullish scenario. You want to see sell side taken out, right? Let's say this low takes out the sells here, the sell side liquidity, and then it starts to break above this area. Now we have a bullish breaker. So
I see.
But this one fits very nicely, in my opinion, because it's within this range, that new leg down that just created, and it is in premium. So everything is lining up. This breaker could also be, let's say the low was formed down here. Let's say it ran the lows, but the low was here. Now this breaker is almost all in discount, which makes it lower probability, because you want to have it in premium. That's the most important part for me: premium and discount. If it's not in premium, I'm not selling it.
Before I continue, breaker, do you mean this is a breaker order block, or is that something else?
I mean, typically an order block can become a breaker, but let's say we did not run the highs over here. It's not called a breaker anymore. Then it's called a mitigation block. It's just a technical term, doesn't really matter. But yeah, in the process, you're breaking a bullish order block. So technically, the order block becomes a breaker block in this occasion. Yeah.
I see.
Can I have a quick question? So the area that you got marked out as breaker here. So what happens is so that's perfect. What I'm seeing here is on the local structure, I'm seeing obviously a lower high, but then a higher low. So I mean, when you hit that breaker area and you're above the 50% fib, you're in discount, wouldn't the current trend be it's a 15-minute? Oh, it's a 15-minute. Okay.
Yeah, this is the 15. Yeah.
Right. Yeah, that's a 15-minute. So I'm thinking like you're selling a 50-minute uptrend, but then it's the 15 minutes. So it's not really that important because the breaker is visible on higher time frames as well.
It's the 1 hour breaker. Yeah. So we have the 1 hour range, which should stay intact because we run all the highs here already. So this is one big order block as well. This is up close candle here. This should be a big order block, which should not get violated. Otherwise, price goes into buy side of the curve, just like it went here, because we're starting to disrespect the bearish areas, and then we can use the bullish, the bearish order block. We can use that as an area where price will go up from again. So I would definitely not want to see that if we're bearish. Hence, I'm using this range right now, and it just barely did not go into premium, so I can sell it. But what they tend to do is to form a short-term high here just before the premium level to run those highs and then inducing more buyers. So we're pairing up the buy stops that are resting above here. We want to sell those buy stops and then pair them up with the lows where the sell stops are resting. So that's called order pairing. So I love to see a short-term high be formed just before the premium level. For me, this is totally fine.
Okay.
one concept you mentioned that I use too is you said if the breaker would be more than 50% before premium, right? So in discount, it wouldn't be interesting for you because you want it to be completely or most of it in above the 50%, and that's one of my rules for how I choose my order blocks on the Quasimodo. So
Yeah, that's
it's
a very good rule. Yeah.
yeah, nice. We got a couple of questions from the viewers. I don't know if what do you say to this? I think when you were explaining that breaker order block, someone, I think it was at that moment, that person made this comment. So it's basically a fair value gap on a higher time frame. Is that so? Does that breaker order block always form or show as a fair value gap on a higher time frame?
I mean,
Like
it
now
could.
you're on the 15 on the H1, for example. Does it show as a fair value gap?
I mean, the breaker block itself is not a fair value gap in this occasion, but maybe it's a fair value gap on the higher time. That could be, but it's in this area, so I doubt that it is a fair value gap. I don't think it's a fair value gap right now, but it could be a fair value gap in that same area on the higher time frame. Let's say I'm looking at a 5-minute breaker block or something, just as an example. Let me see, maybe an order block or a breaker block. Like this is like a little order block here. That might be a 1 hour fair value gap, right? Because we have a big gap here, so it's a 1 hour fair value gap. Yeah, it could be. It could be a fair value gap on the higher time frame, but in this occasion, this is not a fair value gap on the higher time frame.
Yeah.
But they can overlap, yeah.
What about the because it does form a fair value gap as it is breaking it coming down? Does those two things happen together where you have a breaker order block is formed when it is, by becoming a breaker order block is because it's been taken out, right? Is it taken out usually with leaving a fair value gap in the process on the higher time frame, or is that not necessarily?
Not necessarily, but it is the highest probability trade setup in my opinion. It's called the unicorn setup. I thought about it the last stream as well. ICT calls it the unicorn setup. It's the most powerful entry model in my opinion because you have a break of structure with a breaker block and also an imbalance, which means there are unfilled orders over here, which here's only sell side offered, right? There's no candle going up, balancing this gap over here. So there's only sell side offered over here. And once price comes back into that, and there's also a breaker, this is a very high probability area for a sell setup, in my opinion. So I love to see a fair value gap with a breaker coupled up. It makes it even better to trade. But let's say this price leg down was a lot slower. That could happen. And then it would have looked something like this, every time it wicks down and up already, and then balancing every little candle, so there's no gap left behind. That could happen in this entire leg. But then
so no imbalance.
Yeah, then there's no imbalance anymore, no fair value gaps, and that for me that's a little bit less probable to take a setup. Then I love to have the fair value gap coupled up with it, which we actually have over here. Yeah.
Nice. Thank you for that information. What about using how many PD array are you supposed to use, or are you completely free? Can you still choose just to use one? Can you use multiple PD array, or what do you say to that?
I say you can use whatever in ICT concepts, whatever you feel comfortable with and confident with as well. Because you can trade only fair value gaps and it can work out as well. You don't need an order block, you don't need a breaker block. And I see also a remark, ICT says pick one of the PD arrays and not use all the PD arrays. I do agree to some extent with it. Don't use all of them because you will have analysis paralysis. So you're gonna not find any trades if you want to use them all in one area. It's going to be very hard, but I would say use fair value gaps and old highs and old lows. That's the most important. And breaker blocks makes it just so much better because you have an area where price broke down from and it is disrespecting one side of the curve. So I would say stick with order block, breaker block, and fair value gap. Nothing else really.
So
I think
old
also
high.
I think it's important to remember as well, like, yes, this is ICT, but you also have to find your way within the ICT way of trading. I mean, you got to be open to possibilities of you finding something that is not mentioned by ICT, and then finding profitability in that. So I do see with ICT, a lot of people say like, well, ICT says this, you shouldn't be doing that. But if it works, then of course you should be doing that. So having an open mind and testing things and because we're all different, like ICT trades one way, and he's also has a certain personality and trading style that works for one way of trading. So I think it's important that we realize that as well. Like we can't do everything by the book. We have to be open to the possibility of trying new things as well.
Yeah, I agree with that 100%. And that's where journaling comes in, right? Because how are you going to know what is working and what is not working if you don't journal your trades, right? You could find something completely new, but it's not, if you're studying ICT, let's say, and you find something that is not explained by ICT and you see it work over and over and over again, use it, you back tested it, you see profitability with it, then use that, you don't have to follow every single word ICT says. He's come up with more PD arrays than what I'm using myself, and I will not use those PD arrays because I think they're way overcomplicated and they sound fancy for some reason, like it's not interesting. You need to keep it simple. You need to have a simple model and don't start to implement all kind of fancy stuff, and backtest and journal. That's all you need to do.
Yeah, I think that's super important. Definitely.
Yeah, that's something that is applicable to every strategy, basically, to every way of trading, right? You have to measure. You have to measure. You have to be able to measure what you're doing to decide whether you subtract something, you add something to it, whether it's working or not. There is actually a saying in I believe in one of the European countries, right? You have to measure it to know it, right?
I think that's a saying, like universal all over human nature.
We call it in Dutch. We call it meten is weten, which means measuring is knowing. So yeah, we say that.
Yeah, I mean that's I mean that's just to me that's common sense. In trading, if you're going to be trade, because what we do is technical analysis. We look at patterns. We try to find a pattern, and then we assume that pattern will repeat itself. If it's been repeating itself in the past, it's most likely going to repeat itself in the future. But to know you need the statistics of the pattern and everything. You need to understand that it has this pattern actually repeated itself in the past. Otherwise, you can't apply that logic. So I think back testing and testing of strategies is it's super important. And I mean, you can take whatever idea, just take the most simplest trading idea. Like, I'm gonna go long every time the daily candle on EU is, the Friday candle is gonna close bearish. I'm just gonna go long, and then I'm gonna play stop loss here on TP. Try it out. If it works, it works. Like, you get that statistics, and it's really gonna help you with that confidence. What I like about ICT is the methods and the structure. Like, you can pick one concept and then you can try it because the concepts are very clear, and it's very, very easy to test them.
Yeah, I agree. The thing with ICT is he has so much information, which will overload your mind, and that's why he did a 12-month course. It's for free, available on YouTube. Back in the day, it was paid, but if you want to study that, there's 12 months core content. There's so much information there, and he makes it so that you need to backtest it yourself and find your own model. Right? You don't have to use every single thing. And like you say, the statistic that's the thing we're working with, right? We are putting the edge in our favor through statistics, and then we execute on whatever we backtested. And that's the way you make money, with proper risk management. And the hardest thing is you can use whatever model you want. You can trade trend lines, you can trade support and resistance, whatever. if you have it back tested properly and it has a good outcome, then you only have to apply good psychology and risk management. And that's the
Yeah, I gotta
hardest
say,
part
like
for
your
all
fan
traders.
base. Yeah, sorry, but your fan base is amazing. We got there's some of the comments here that I can't pull up, but they're very interesting. Your fans, you get a very awesome
Yeah,
fan base. I see that you get a lot of followers. You're the people coming on here really like you, like your analysis. Yeah, it's amazing. Very cool to have you guys.
yeah, we're getting
Have you
good.
guys
We're
here in the
getting
comments. It's
yeah,
good
we're getting
question, good
some
engagement. You guys
reactions.
are awesome. Yeah,
Yeah,
we love Tom as well. Definitely.
Yeah, I have an awesome community. I love all of them. They're very positive as well. And I would like to banter as well, you know.
Of course.
Yeah.
Do you trade gold? Do you ever trade gold?
Well, gold is kind of an asset that is hit and miss for me, so I tend to not trade it.
Right. Yeah.
I think I took one silver sell like 5 or 6 weeks ago, which made me scale up the 5ers account. That was like the only commodity trade I took this year. So it really has to look really good. Otherwise, I'm not touching it. It's really hit and miss. If I look at it right now, we actually were looking for sells this week, but if I look at it right now, it's kind of iffy. I think it will run this high one more time because silver is not in premium yet. So silver and just like silver and gold are correlated, just like EU and GU. I'm feeling like silver is gonna need to run in premium first before they both go down. So that's kind of what I'm waiting for.
Do you think the reason why I don't like gold is because it's unpredictable and it tends to like run the stops when you least expect it?
It does run a lot of liquidity, yeah. And
Yeah.
I think if I would trade that, I would only trade higher time frame levels, because like if you trade that on the 1 minute, 5 minutes, even on the 15 minute, boy, that's mentally draining for me. So I will only trade it on the 1 hour or 4 hour level, and just submit
Yeah,
to the
I think the 4 hour for gold is definitely one of the at least for me one of the best time frames. I think.
Yeah.
And also for gold, like when I'm trading gold, I try to only focus on, like I ask myself, where's the perfect level? Like where's the absolute perfect level? Because sometimes you'll see gold hit support, and then you think you have a good trade on that support, and then boom, it just went straight down to the next level above, which is just perfect on the higher time frame. So sometimes I go to the high time frames and I feel like where's the best high time frame level for gold? Usually, trading those high time frame levels, very nice. But then trying to day trade gold, yeah, it's very difficult. So definitely got respect for those who are able to trade gold profitably, day trading. But I think also, I think it's about different personality. And I've interviewed a couple of gold traders, and they're like, yeah, I trade gold profitably, but I can't trade EU, right? And then you have people trading EU and they can't trade gold. So I think it's just finding your pair and finding the market that works for your trading style is also very important.
That's true, and also personality, right?
Yeah.
It has to be. That's one of the requisite, right? When you're choosing your strategy, the same applies. You have to choose a pair that goes with your personality in terms of how fast it moves, how irrational it moves, things like that. That's the same things you have to apply for the strategy, but also the pairs. Right? So if a pair moves differently than you're accustomed to, if you don't have patience, then you want to be in something that moves a little bit faster than something that ranges a lot, for example, if you're not a range trader in this case. Tom, I think one more question about your GU. I think it was your GU, your the setup you showed us. You mentioned at the beginning that you mentioned about the liquidity target or terminus. I think you mentioned. What is that? What is terminus?
I just wanted to sound fancy, but it's just the completion of the market maker model. So it's called terminus by ICT. It's just running the target, which is either that original consolidation, right, on that 4 hour. If we run the low, then it's terminus. Then I will sit on my hands and see what it does, whatever it does after. I don't want to engage in it anymore. But we also have like terminus on these lows, because this was the initial target for London session, because we had relative equal lows down here, which means there's
liquidity, right?
there's a lot of liquidity down here because there are all stop losses down here because there's relative equal lows, and there's a lot of support and resistance traders who put their stop loss on relative equal lows. So that's an easy target if you wanna look for sells. You always look for these type of signatures. So equal lows, trend lines, that kind of stuff. Yeah.
Nice. So basically, the terminus is where the setup completes, where you don't have it completes, and the setup is gone because it's done.
Yeah, it's done.
Yeah,
So
nice.
there's also a little market maker sell model, fractal, right? We are in a bigger market maker sell model on the 4 hour, but if we zoom in on the 15-minute, the same thing happens over here. We have a small consolidation down here, and then it goes up. Then price comes back down into discount of this range, if I'm not mistaken. Yes, it comes into discount. So this is considered a low risk buy in this area, and then it starts to reaccumulate, then takes out buy side, and then reverses. So now we're going into sell side of the curve. So what happens over here on the 15-minute in this piece of price action is exactly the same what happens on the 4 hour. Only the sell side delivery, the price going lower, was way faster because it did not have another little consolidation in between and then start to trade lower. So yeah, it's all fractal.
Yeah. So basically, there you would have the buy side of the curve, and then the sell side of the curve again, just fractional, just another time frame.
Yeah, exactly. And then sell side over here, and then it's completed. So
nice. Great. Very
when it comes to, like, Tom, when it comes to like trading psychology, how important is trading psychology? Would you say it's more important than technical analysis?
Yeah, 100% psychology is more important than technicals. Why is it more important? Because technicals, everybody can learn technicals. We're all seeing the same thing on the chart, right? We're all seeing the breaker, or if you trade ICT, obviously, we all see the fair value gaps. That's objective. Nobody can argue that it's not there. You entering into the marketplace will do something in your mind, especially if you're not used to the amount of money that is going up and down on your P&L, right? That's why I always say start slow and then trust the process and build up that consistency, because you need to build up some layers within yourself. You can't start at trading a 100K account when you've never traded any live funds, or maybe just you put on $20 or $30 risk on your own live account, and then you go to trade a 100K account, and then you see 500, 700, 1500 floating. What are you gonna do? You're gonna close early, or close at break even because it's fluctuating too fast for you, and you're focusing on that number what's floating over there, and you need to focus on what's happening on the screen and not what is happening on the P&L, right? Because this morning my GU trade was floating, I think over here was floating like 4,000, and then when it got down here it was floating 8,000. If this was my first year, I would have closed when it was up 600 over here, but makes no sense, because I don't have the experience or the mental to keep holding that. So definitely start slow, and psychology is super important, and you will never get profitable if you think you can just buy a big account, and then buying a bigger account doesn't mean you're going to be profitable. If you can prove to yourself, let's go just small, do a 10K account, pass it, make like a few $100s on it. Now you've proven yourself, okay, I can do this on, you see results on a lower amount of money. Then you go to the 50K, then you go to 100K, and now you can scale up, So trust the process and don't rush it, because it will not work if you rush.
Yeah, no,
nice.
definitely.
Yeah,
I think you're absolutely right on that.
Yeah.
Do you, when it comes to trading psychology, I'm sure that you, like everyone else that started trading, did have problems with executing trades and exiting too early and things like that. Was there a moment when you, like, because we all kind of, there's a point in every trader's career when they go into the realm of profitability. They take a step over that threshold where they all of a sudden they slowly but surely become consistently profitable, and it's very difficult to look back and say when that actually happened. But I mean, for me, that happened when I started being consistent in the way I was thinking, and in the way I was approaching the markets and looking at the markets, like doing my planning and my levels, and everything I did, not only in trading but also outside trading, was kind of consistent. So I wake up in the morning, and everything I do in my morning routine, it's about like what can I do today to make sure that I'm able to trade well. Would you say that there, like, how would you describe that scenario for you? Like, when did it kind of like click?
Yeah, that is a very nice description, because you need to have that structure. You need to approach trading as a business, because in the end you are putting in orders and you're making a transaction. And do you want to have the best transaction you can, and do you want to have the best sell and the best buy? So yeah, structure is very important. For me, let's say every morning I wake up at 7 a.m. my time, local time. I just get a coffee, go to my chair, and then I do my analysis, right? This is what I do in the morning. But my week starts on a Sunday, because I'm gonna analyze every higher time frame chart, so I know what are the potential plays for the upcoming week. If you're not doing that in the weekend already, you're not doing it properly, in my opinion. You need to know where is price going before the market opens up, or have an idea where the market is going. And then when the day hits, you're going to assess again, see what the lower time frame is doing, right? So structure, very important. And most of the people go into trading because of the money. I did as well. But if you only focus on the money, it's going to be very hard to become profitable, because you kind of need like a little obsession, a passion for this. Because I love to watch candlesticks print on my chart, and some people would be like, "Damn, that's the most boring thing ever." But for me, it's a game. I want to see, okay, where are other buyers and sellers? Where can price take them out, and where can I be right and make money out of it? I can also be wrong and make money out of it if I just do proper risk management and get out when it's showing me that it doesn't want to go somewhere, right? But yeah, for me, it's really love for what is happening over here.
Yeah, it's a good point. I mean, I remember when I started trading, people probably looked at me and like, that dude's pretty weird. He's like sitting at his desk, just looking at those candlesticks, just moving up and down and up and down. And he's not even making any money, But now, nobody. Well, I guess some people call me weird for different reasons, but those people, they don't call me weird. Like, I'm making money doing this. I'm living my life. I can work whenever I want from wherever I want, and basically complete freedom, right? The people that call me weird when I was looking at that small screen, and now I got multiple screens here. I got my own office, my own setup, everything that now they're coming to me and asking like, how can I get that life? Well, you got to start by doing weird shit. Like, you got to be super obsessed with this. Just look at those candles day in, day out. Get the statistics. I mean, you said it right there. You got to be a little bit obsessive, and you have to really love technical analysis. Like, if you're sitting at home, you're like, how can I make money? Well, okay, I think I'll try trading. I don't really like it, but I'll try it because I can make money. Well, that's not gonna work. You have to look at technical analysis as an art form, right? And you're an artist. You're exposing your creative ideas to the canvas, which is the chart. And I think that's, if you have that mindset, it's much easier to get into that, to become a winner. Basically, you need to be positive, and
negative thoughts
be a bit weird.
Yeah, negative thoughts have no place in trading. And this is also what I want to say. If you are learning to trade, just trust the process. And why are you denying yourself a lifetime of freedom through the financial freedom with gambling, over trading, over leveraging? Why are you doing this to yourself? Why can't you be disciplined? Just think about what you can do, right? For your family, for whoever you love. This money is a byproduct of the success, but you can do so much more with that money. Don't you want, let's say you come from a poor family, I come from a poor family, don't you want your mother to have an easier life, right? Why are you over leveraging? Why are you gambling? Just think about that next time you feel the urge to put on a big lot size while you can't afford it, and revenge trading. So really get that into your mind. And yeah, that's the only thing that's holding you back, because of these types of behaviors.
Yeah, I think that's really well said, because when it all kind of started to shift for me was when I, every time, I was about to make a mistake, because we kind of know when we're making mistakes. It's sometimes it's difficult to accept the fact that, you see a setup and you're like, well, I'm going to take that trade anyway. I know it's not at that high time frame level I want it to be, but I'm going to take the trade anyway. And you're like, you're accepting the fact that you're making that mistake. But I started asking myself, why are you trading? Like, why are you taking this trade? Why are you trading? Well, I'm trading to make money. I'm trading to be consistent. I'm trading for freedom. And then, like, well, if I'm doing that, if that's why I'm trading, then it's probably better to wait for that high time frame level to get hit, because this trade is not the perfect trade, and this is not going to make me money long term. This is only going to be more anxiety. Tomorrow I'm going to wake up, it's going to hit stop loss, and I say, like, why did I take that trade? Like, why did I make that mistake? And I think a lot of people, they enter a position and then it hits stop loss and they're like, oh, well, that was a bad trade, I shouldn't have taken that trade. Oh, you have to figure that out before you take the trade, right? It's very, very difficult.
I think people already know when they're not supposed to.
Yeah,
Sometimes
they know.
when I enter a little bit too early, I know I entered too early, and I'm like, shit, I entered too early. I know, but some people just keep doing it over and over again, and that's where the gambling comes in, right? Because they're like, oh, I'm just holding through the drawdown, and it will go down eventually, and that's hope.
Yeah.
And we don't want to hope when we trade, because that will destroy you. Yeah,
definitely. All right, man. Tom, it's been an hour, and it's been absolutely awesome to have you on here at the live stream again. I said that this time we're going to be doing like live trading and sharing different charts, but like, when it's just very interesting to ask you these questions and walk you through the analysis here. I do learn quite a bit every time you come on. So I'd like to thank you. And Victor, unless there's any more questions for Tom.
No, not really. I think you did a great job in explaining the concept, Tom. Thank you very much. I think a lot of viewers, we saw that as well in the reactions. A lot of them were very engaged and very appreciative of everything you shared today. Thank you very much.
Yeah, thank you guys for having me, and I appreciate you guys invited me. I would love to do a little live trading, but I'm waiting for this. So if you guys wanna, I will be in the back of your mind waiting for this. So. But
nice. Well, we're definitely going to bring you on again, do more live trading session. And guys, if you want to follow the OTE Trader Tom, you'll go to the description in the link. You'll also find how to join his amazing trading community as well. So make sure you go into the description of this live stream, check out his socials, and give him a follow. A lot of value on his Twitter as well. All right, guys. All right, Tom and everyone. Thank you for joining here. We'll do a 10-minute break, and then we'll be back, me and Victor, and we'll do some live trading. All right, guys. See you soon. All right, here we go. I finally got my lunch. I wasn't able to get in the lunch before the live stream because my camera and everything started breaking down, so I had to set all of that up. All right, so what are we looking at today? Let's see if I can bring up my trading view here. Got a few interesting potential ideas that I'm watching. Guys, if you're watching this and you did enjoy what Tom showed us, which I really did, I think that was some really good stuff. Make sure you like the live stream so that we can, the more likes we get when we have guests on, it's a good signal to us. That tells us that we're gonna bring them on again. This trade right here is actually quite interesting. Now I did close this trade earlier, but I wanted to show you this. This is quite interesting where we have, we got I think we can even look at the weekly. So this is Euro NCD. Yes, the 5ers is the best prop firm, if I might say so. Maybe a little bit biased, but I definitely think so. Look at Euro NCD right here. It's in a range. It's a pretty good range right here, and a lot of times we see price go from the range low, right, up towards range high, or at least the range EQ. So if you're trading this as a range and you're trading from range low to range high, then you might look at this as the FTA. Then the range EQ would be your FTA. But a lot of times you'll also see that you do get a move up towards the range highs. And what we saw here on Euro NCD is just a beautiful, beautiful example of that, where you have a daily bullish engulfing. And I remember talking, I believe I talked with Alex about this, the last live stream where Alex was on before he went on vacation. I told him that we if you want a system where you leave like minimum screen time, you can only look at the markets like you stay a couple of minutes every day. Then you want to look at the daily, and you want to look at something like this where price is trading within a range and you hit range lows and you have a daily bullish engulfing candle. And I wanted to touch on this in this range right here. So this is the range, and you got range lows here. And then we'll look at range highs as well. So what happens if you sell every time you hit range highs with a bearish engulfing on a daily? And what happens if you buy every time you get a bullish engulfing on a daily at support? Now, I haven't tested this. Like, I have no idea how this works, but let's just assume that we're going to go short at range highs down to range EQ and long at the range lows up to range EQ. So can you trade profitably doing this? Well, we're going to look at that one right there. That is a bullish engulfing on a daily. First time hitting that level, stops below the wick, TP at range EQ. That's a profitable trade right there. And if you view this as a hit of support, then this would have been a profitable trade as well. Probably too low of an R. It's only 0.5, so maybe that would have been a trade. And then you have another one right here. Bullish engulfing candle hits that support. That would have been a winner. And do we have a loser somewhere? Yes, we do have. I believe that would have been a loser because it goes below the wicks right here. And I think maybe also this would have been a loser unless you use that wick as your stop loss. You can the previous wick, then that would have been a winner. And then you have another scenario where you hit the same level, bullish engulfing on the daily, stops here, and then TP at the range EQ. And then this one right here, which is the one I entered, stops below the wicks and TP at range EQ. So we have 1, 2, 3, 4, 5 or 6 trades where one is a loser. So within this range, there's definitely something to be said about that. And then you have up here, you have a bearish engulfing candle at resistance, but then maybe you'll see this as a fake out, so you want confirmation that it closed lower. Well, that's your next daily bearish engulfing candle, range EQTP, that would have been a winner. What about this one right here? Probably, maybe, if you're going to be, looking at this as you need to go down to range EQ, then yeah, that would actually have been a loser. But then the next occurrence, that would have been a winner right there. And then that's the last one. But why I'm showing you guys this is because technical analysis does not have to be very complicated. What I did here was just look at support and resistance within an overall range, and whenever price hits support, you look for a bullish engulfing candle. Whenever price hits resistance, you look for a bearish engulfing candle, and then you trade it to the next level below or above. And looking at this, we could definitely say that technical analysis is simple. It's not very complicated. It doesn't have to be complicated. But why is there so few profitable traders if technical analysis is so simple? And I think that's an important question to ask yourself. If you're getting into the game of trading, you have to ask yourself, why is trading so difficult while the thing that every trader is doing to make money is so simple? Why can't we get it to work?
Yeah, I think we complicate things. I think we have some preconceived notion or ideas about what it should be, right? Because it sounds logical, it sounds intuitive, right? What we think, those thoughts, like for example, the more, right? If one trade is good, then two trades must be better. If three tools or three indicators or three structures or three anything, right, you use is profitable, then six things will make your system more profitable, right? And it is those ideas that perhaps in other aspects of life make sense and are truly true, right? It fundamentally true. In trading, it's not. Those are, they don't hold true, and I think those are maybe one of the reasons we make it more difficult, because we try to apply the same principle we learn from other parts in our lives to trading, and it doesn't work like that. A lot of the times trading can be counterintuitive. A lot of the times it is, like sometimes sitting on your hands is the best thing you can do. That doesn't make sense. You came to trade. Why are you sitting on your hands looking at the chart? You got to be trading. Aren't you a trader? Why aren't you putting the trades today to yesterday? What's the matter with you, right? You have those voices telling us it doesn't make sense. You're a trader, so trade. But it doesn't work like that. And we, of course, after we've learned that, and after uh, tripling and getting back up, we know what works and doesn't work. But I mean, for the newcomers, and even for some who may be in the game for a longer time, it is those lessons that will make a difference. Once you start realizing what works and what doesn't, you can start eliminating those things that don't work, those ideas that they don't help you. And the only way to do it is by measuring what you're doing, right? By documenting what you're doing. Either it's a thought, it's a structure, it's a maybe a combination of indicators that you're using. By documenting it and measuring the results, right? In other words, journaling. It's only through journaling, that through collecting of data, what happens if I do this? That's the same thing you were doing just now, right? Let me try. You had a mental experiment. What if I do this and I use only 3 or 2 things? What happens if I do this? What are the results? And then you go measure that in time. You collect data, and you can come to a conclusion. Okay, this works, or it doesn't. And that's that's the process by which we grow as a trader, by collecting actually it's the scientific method. It's nothing different than what a scientist does, right? The scientist has an idea, a hypothesis and that it needs to, test and see if it's true or not. It's basically it's the same process. So yeah, evidence based.
Yeah, I think I wanted to show you something. I got let's look at NCD CAD. So you see here, if I go into this horizontal level, you'll see when I double click that, when I go into settings, it has a text option. This is fairly new in TradingView. You can actually add text right on whatever drawing you have. So we can add, for example, we can have a parallel channel right here, and you can actually go in and you can add text to the parallel channel. You can write whatever right here, and it's going to add to the channel. It's pretty cool. It must be fairly new because I haven't seen it before. Same thing on the fibs. You can go in and you can add text to each of these fibs right here. So you can go in and I can add text right here and can say, Victor, and then I can go to the next one. S, and then the next one. Awesome. Pretty cool. That's fairly new, I believe, in TradingView. So what I've done here is I've added my levels here on the weekends and just went in and added weekly support here, and it fits nicely on all time frames. Pretty cool, actually. Anyway,
I've noticed it starting last week. I've noticed what you're mentioning, that if you hover over an object, there comes a plus at text. I didn't see that before, and that was last week. I start seeing it. I thought it was something that I touched. I messed up with my templates, but now that you're saying it, it makes sense. I think it's a new feature.
Yeah, it's a good one. I think it's a pretty good one. It makes it very simple to add text to things to keep it organized. So I wanted to show you the plans I did here over the weekends. So it's very simple. I only really have 5 pairs that are of interest to me. Right now, it seems like none of them are moving in the direction I want them to move, but that doesn't matter. It's Monday, and I know that a lot of times, whatever happens on a Monday, to me, from a swing trading perspective, doesn't really matter much. It's really the price action on Tuesday I'm more interested in, to see if we can get followed through on the Monday's action, or if we move in the so here's a good example: Euro CHF. So when doing the plan on the weekend, I'm looking at this and I'm thinking that, well, this is support. Why is it support? Well, because it's an area where price has reacted to in the past. And price hits it from above. It makes it support. Very simple. We got the break above here and then hits that level below. It's confluent with the reload zone as well. And I'm also watching this as a form of potentially, it's not perfect, but what I'm seeing is like high area and then a low area, and I'm kind of watching this. Perhaps, I don't know, but it's at support, so I'm looking for longs. Now, what we're seeing right now is I want price to bounce here. So I want to see a reaction, a bullish reaction to this level right here, and then I want to see a move above the 0.618 and a reclaim. If we get this type of price action, then I am going to go long here with stops perhaps below. It depends on what the retest looks and everything. Maybe stops down here, and then I'm just looking for a small move up to the FTA. So hopefully I can get a tighter stop loss, because looking at this, then my FTA is going to be around these areas right here. So the way I'm trading is I'm looking at high time frame levels, and those high time frame levels is my area of interest. And then when price hits that area of interest, I can assume that there is a fairly good probability that there will be a reaction. So if price hits the support level, a high time frame support level that is haven't been tested, at least for a couple of days, I know that the probability of having a reaction at that level is very high, actually. But what that reaction will be, I don't know. Like, I don't know if it's going to be just a couple of pips or the hundreds of pips. I have no idea. So the idea for me is to trade based on the fact that there will be a reaction, but I don't know how big that reaction will be. So I'm looking for a move up to the very, very first trouble areas. In this case right here, that would be around half an hour. So it's only half an hour for this trade right here, because what I can do is I can look for a trade up to this level. Looking at the local trend, we could definitely say that this level right here is a good FTA looking at the local trend. But then looking at historic price action, what I find is you have this level right here that price completely broke through without any reaction at all. So when price comes back up into this region, I'm thinking we're going to have a reaction, and I want to make sure that that's where I TP. Now, a lot of people look at this and they say, I'm trying to get rid of that drawing right here. Why is it so difficult? Okay. A lot of people will say, well, it's not worth the low risk to reward. But think about it. We can all agree that when price hits a high time frame level, there's going to be a reaction. Very often do we have a reaction. You can look at this move right here. That is not that on the 4 hour, we don't get a reaction. Like it just went straight through downside. That happens. Not a lot of times that happens, right? And that's also one of the reasons why I want confirmation, because sometimes that might happen. But if you're looking for confirmation of a reaction, then that increases the chance of having a bullish reaction at support significantly. So the percentage, if you look at it percentage-wise, if you have 10 occurrences or hundreds of occurrences where price hits a high time frame level, I would assume that the instances where there's a reaction is above above 80%, maybe even 90%, that price does give you some type of reaction. And that initial first small reaction, that's what I'm trading, because I know that, okay, there's going to be a reaction. How can I make money on this reaction? Can I make money by waiting for that bounce and then holding that trade for a big winner? Of course, I can do that, but then the win rate is going to be much, much, much lower. But if I look at just a very, very small reaction, I know that the win rate is going to be big. It's going to be high, which allows me also to have a much lower risk to reward. So this month, I believe, for the last 2 weeks, I've had an 80% win rate, and this month I'm about 75% win rate on total, and that's by looking at only high time frame levels. So you guys know that I think about 2 months ago I switched to a low, taking profits at a half an hour, and then I said, well, in 2 months I'm going to compare exiting at 1 hour and exiting in half an hour, and I did that. So I think I have 50 trades or something like that. I compared it, and half an hour is actually more profitable. So exiting earlier for me is more profitable than having TP at 1 hour, which is, it's very, very surprising. I did not expect that. Like it's very, very surprising. But now that I have the statistics, I have the data, it gives me a quite high level of confidence, especially also when you look at the win rate of being 80%. It's much easier now for me to execute without having any emotional attachment to the trade, so to say.
And I got a question for you, Jonathan. How does it feel, or actually, do you notice a difference in your confidence when you take? Well, actually, that's maybe not the, the right question, because you were taking that trade already with your strategy, which has data backing it up. But I mean, how confident were you of the half an hour TP before and after you have more data? Has it changed you in terms of how confident you think you are that it will hit your half an hour TP? Have you noticed a difference?
Yeah, so in the beginning, it was really, it was quite difficult waiting for that loser, because I knew that the loser is always going to be bigger than the winner. So if I have, for example, let's say I have one loser, I'm down 1 hour. And then I have one winner, I'm now down half an hour. And then because of a mental mistake, I have another loser. So I'm now down 1.5 R, but I've I've had a winner. Normally, with one winner and two losers, I would have been in profit, because the winners pay for the losers. But now it's the other way around. If I have used a little bit more losers, I'm going to be way down in drawdown. So it was quite difficult I was quite fearful of having losers, because I knew that one loser can potentially remove the gains of two winners, and my my confidence came from having a high win rate, like having, like in this case, 80% win rate. But I was very fearful of having a loser, and also quite fearful of what the long-term results would be, because it just didn't make a lot of sense with the negative risk reward. So I was fearful that long term I'm just going to be a break even, but and then then taking profits of 1 hour is going to be much more profitable. But now I've seen that what I'm doing is actually working, and it's working very well. So now it's almost like I welcome the loser, because I know that the chance of having a loser is low. So when I do get a loser, I know that it's not going to come another loser right after this one. I'm not going to have a string of losers. It's very, very low risk, right, of having a string of losers. So it's almost like I accept the losers much easier, and it's almost like I welcome them, because I know that, oh, nice, I've had a loser. Now it's time to win. Now it's time to have a string of winners. I try to kind of turn it around.
Yeah, I see. So basically, after measuring and observing that your win rate is much higher than you would have thought, after measuring, you became confident in the strategy, right? Or the new setting where you have half an hour as a TP. So what I'm trying to get to is, it was after you had some data on this new idea that it increased your confidence level, and put you in a more comfortable place in mindset wise, right?
Yeah, and I think, what really changed everything was the mindset. I think that is that's way more important than now. Of course, testing it and going through my journal did give me more confidence, and that confidence helped me, from a trading psychology point of view as well. But what really helped me was being consistent with my weekly trade planning, and only taking the very best trades. I think that is what my journaling showed me, that when trading like this, there's no room for error, like literally no room for errors. If I have a couple of losers extra, I'm not going to be profitable, because I have such a low risk to reward per trade. If I have more losers than what the system allows for, I'm not going to be profitable. So I need to have like laser focus. I need to do everything right. I need to be consistent in the way my trading routines and everything around my trading has to be just perfect. And when I realized that, and I actually started implementing that, that's when the real change happened. That's when, like, now I know that. So these plans here, over the weekend, that I'm going through these plans right here. Like, I'm not going to take any other trade. These are the trades I'm going to take. I know that. I mean, sure, if none of these trades are giving me anything, like if it just does completely opposite, then I have this list of interesting pairs that I have alerts for, and I might take a couple of trades. But it's really these that I focus on. And for me, like, I'm okay with just having a few R, or even just 1 R on a weekly basis. That's completely fine with me, because with the high win rate, my average drawdown is very low, which means I can risk more per trade. So I can risk Like right now on my bigger account, I'm in drawdown, so I have to risk 0.5%. But as soon as I get back to break even, I can actually risk 1% per trade, which means if I make 1R a week, that's 4% in a month, which is huge. And I can
Nice.
easily make one trade per week. I mean 1R per week with only 2 or 3 setups in a week, which means these setups right here is all I need. These are all the plans I need. If we look at GBP USD, for example, this is this is one of those trades where I'm looking to go long. And what we're seeing right now is we're seeing a decent 4-hour structure here. And if we can get above this level right here, maybe have like a break and retest. Well, this is the trade I'm taking. I'm going to enter here. I'm going to have stops here, and then I'm just looking for a move up to the next FTA, which is just these highs. It's just such an insanely small move, just up to these highs. That's the trade right there. And if I can take 1 or 2 trades like this one, I'm up 1R, and then of course I'm gonna have the occasional loser, but that is, from what I've seen, not doesn't really come along very often. Right now, I'm my last 6 or 7 trades are winners. So yeah, I think
It's kind of funny, because you said something key, I think, and you're letting your expectation and how you estimate the value of things depend on the data, which is, I think, the correct way to do it. You said a couple of things key. You said because you have a negative risk reward, you have adapted and become much more selective with the trades you take, right? And that selectiveness has led you to a even more comfortable place in terms of drawdown, because you don't take that many trades. Those that you do take are high quality trades. They come with a high win rate, meaning you rarely have losses, and meaning your drawdowns are very limited relative to how you were trading before. So what you did was, you said the you looked at the statistics saying one loss is twice a winner, so I need to watch out that I don't have many losses, right? So you focused on that risk, and I did something, or I do something similar, not exactly the same, but it's the same kind of process. What happens to me is, since I have a high risk reward, right? So mine isn't below 1, it isn't negative. It fluctuates, but it can typically be around 1 to 6, right? And in my case, a loss, I'm not too sensitive for a loss, because I know the other way around, I only need one winner to make up for many losses. So a loss doesn't affect me that much if it's just one or a few. So to me, yes, I need to be selective. Fair. That's a fair point. But if I make a little mistake in taking a trade that isn't part of the plan or not, even though I that's something I focus a lot on, it's not the end of the world, right? It's something that I constantly, I aim to improve and make sure that I don't take anything outside of the main signal. However, my pressure comes on the other side, because I know that in 1 week, usually I have 1 or 2 signals that will make my week. So that's the other side of the thing. My pressure isn't being selective. My pressure is, I don't want to miss any signal, because any of them can be that one for the week, and I can have like a break even week, or maybe slightly positive, slightly negative. It is that one or those two that will make up, and I can be up 15R. And if I miss those, missing a trade is much more risky for me than it is for you. For you, taking a bad trade, that's the risky one.
Right.
And
That's
so
very interesting.
it's the other way around, but it's basically the same thing. We look at the data and see where's the danger, where's the risk. In my strategy, it is missing my winners, the big winners. And in you, it is, taking trades that are mediocre and have a lower win rate. So you become more selective. But it's basically you adapt to the statistics of your strategy. And this can only be done when you have data to base upon, right? If you don't have data, there's nothing you can do. There's no adaptation you can do to your trading strategy, system, the rules, etc. So it's very interesting. I think it's a key thing.
Yeah, definitely. Yeah. I mean, it's important. It's important to understand what how we work from a what how we're affected by the way we're trading and the system and the win rate and all of that. Like, I mean, I would definitely find it difficult to trade the way you're trading. It would be very, very difficult for me to do that. And just like you said, like your biggest danger is missing a trade, where my
Yeah,
biggest danger is, because missing a trade for you is like having a loser, because you're missing out on a lot of profits, which is basically the same thing as losing. If you miss out on a good trade, that is also almost like losing, because then you remove that winner from the sequence of winners and losers, right? So statistically,
exactly.
you kind of need uh, that trade. Um,
There's a
this is
quite interesting question here. Says
yeah,
how long you guys been unprofitable, and this the question might sound weird, but I think I get the question. The
yeah,
viewer is asking how long did it take us, right, before we got to profitability.
yeah. It's a good question, and I think because it's important to understand how long it takes to become profitable. Like, it took me, I think it took me a year. So it took me about 6 months to understand that I needed to like, I remember when I started, I had no idea what risk management was. Like, it took me maybe 6 months just to get an understanding of the importance of risk management. So you could assume that not very profitable, and then probably a year extra actually, studying technical analysis and risk management. And I would say, from starting to becoming profitable, I mean, I probably became a break-even trader in a year. And then from there, like, slowly but surely started making money. But it wasn't until probably like 2 years ago where I got funded accounts and everything. So, I mean, I've been, yeah, I would say longer than a year. Definitely longer than a year, maybe 2 years.
Yeah,
Probably,
that
probably
sounds.
somewhere around. Yeah, I probably became profitable around 2019. Started in 17, and then probably 2 years of uh, consistently losing money for 2 years, probably.
Yeah, that sounds familiar. I would say it took me the first I would say 3 years I was unprofitable, and in between, I did have moments or periods where I did see profit. Right? It's not that I didn't see any profit at all, but I wasn't consistently profitable. I was, in the end, I wasn't profitable, but there were moments where I did have some good streaks and I did get some profits. So the first year, I really didn't know what I was doing. I couldn't make it work. But after, I think in the second, the third year, I started seeing some results, but I wasn't still consistently profitable. It was after the third year that I start seeing, and that's when I started doing a data collection. And that's the difference that I noticed. It was, and that process took a long time, because data collection does take some time, and you don't know exactly what you're looking for at the beginning, right? So you're doing all kinds of data collection, you're collecting all kinds of data, and you're analyzing and see, okay, this isn't improving my strategy. Okay, let's start something else, and so on. That whole process took, I think, about a year at least, and that process never ends. But I mean, that process, which pushed me into consistently profitable, took about a year and a half. So, and then that was in the third year. And after the third year, I started seeing some consistency. And then slowly, it wasn't all of it all at once either. It was slowly improving, eliminating things that don't work, working on the psychology, on my behaviors, working on journaling, and slowly. So I would say 3 years. The third year, I started seeing consistency, but I would say it was still a work in progress. So I would say 3 years, and I think it's everyone, of course, has their different time. I mean, some people will take longer, and some people will be shorter, but it's a very personal journey. And you're not competing with anyone else, so don't feel the pressure to, you have to do it within 1, 2, or 3 years. I mean, if it takes you a few more, doesn't really matter, as long as you're doing the process right, as long as you know how to collect data, how to improve yourself through journaling, through feedback loops, so the reviews. As long as you're improving, you should keep on going, and not quit. So,
Yeah,
but
and I
that's
think
that's what I would say.
I definitely think it's possible though to become profitable within 6 months if you start the right way. If you start with get a system, understand the system, backtest the system, and then figure out what type of trading psychology problems you're going to run into in trading. If you have that from the very first day when you're starting trading, become profitable in 6 months, I do believe it's highly possible. And I've seen people go from nothing to profitable in a very fast time. But that's because I think they start out with like a mentor that doesn't only give
That's what
them
I was
a
gonna say.
yeah, exactly. They start out with a mentor, and that mentor tells them, keep it simple and focus on psychology. You're gonna like trading psychology, you gotta get in the right mindset and then pick whatever system, backtest that, get confident, and then be consistent. Like, so when we start, it's like, what's the best indicator? Like, what indicator is going to make me money? Like, I don't want to put in the work. I just want signals. I want buy and sell signals. I want all of that just emailed to me daily. And if I can only get that, I'll be profitable. Guess what? Like, even if you had the best indicator, the best system that gave you automatic signal, you would still not be profitable because you would exit early. You would put the stop loss in the wrong area. Like, you would make those human, errors. So I think
Yeah.
very possible to if you start from the right level, then yeah, I think you can be profitable quite quickly.
Yeah, that's one thing, perhaps we didn't mention, but it makes a lot of a difference if you're inside of a part of a community where you can learn from other people's mistake, where you can learn tools and get tips from other. Like, we have a very growth oriented community on Discord, which can help you fast, accelerate that process. It doesn't need to be taking as much as it would be if you were in a community. That's one thing. If you have a community, a trading buddy, but one person only, uh, may not be able to teach you as much. But if you have a community of people who have different levels of experience and profitability, I'm sure you will have a lot of things you can, learn from them. That's one thing. I didn't have a community, and the other thing is, I did it without a mentor, right? So I
Yeah.
figured everything out on my own. I didn't have a strategy from anyone who, served me in a silver platter, do this and that, and you're gonna see profitability. So I had to figure things out, invent a wheel, basically, on my own. But if you do have a mentor, then of course the time it takes to be profitable can be much shorter, because that mentor can tell you, stop doing this, that doesn't make sense, way earlier than you would have realized it doesn't make sense. That's one
Yeah,
thing. And
exactly.
they will tell you this works, go figure it out, but at least you know that this works, right? And when you don't have a mentor, you're going to be trying different things without even knowing if they actually work or not. So a mentor can be, in that essence, can cut your time to profitability and much faster. And if you do it like that, then of course I can see someone working very hard, reaching it within 1 year, for example. But it's only if you have someone, that's taking you by the hand and telling you, go this route, come back to me when you found this, and I'll give you the next tip, the next thing to do, and so on, like a real mentor should do.
Yeah, if it took me 2 years to become profitable, I probably spent 1.5 years doing technical analysis, and then the last 6 months figuring out that it's not about perfecting the system. It's about your consistency in the way you're thinking and in the way you're trading. So I really wish that there was somebody that told me in the beginning. I wish somebody came along and just said, just pick a system. You don't have to have the perfect system. You don't have to have the perfect entries. You don't have to have 10 or 20 hour setups to be profitable. You don't have to have a 90% win rate. Just pick a system and be consistent and journal, and what are the best setups of that system? Where are you making the most money according to your journal? Only take those trades. Only take those trades, trade less, those sort of things. That's what I think is so very important. And the thing is, I'm telling you guys watching right now, this is what I wish I knew when I started. So if you're starting out right now in trading, listen to what I'm saying. You want to keep it simple. You want to understand that technical analysis is not what's going to make you profitable. It's very important to understand that the more market research you do doesn't mean you're going to make more money. Okay, you're going to pick a system, keep it simple, and be consistent with what you're doing. Because a lot of people, they I have this setup where I enter here, and then I have that setup where I enter here, and then I got this type of setup where I enter based on this. Well, pick one, study that, look at where you're making the most money, journal, and be consistent. Do the same thing over and over and over again. And if you're going to change something, make sure you have data to back up that potential change in your trading. This is what you're supposed to be doing. And I know that 90% of you watching this are still going to be trading from an inconsistent approach after watching this live stream anyway. That's just human nature. We can't help ourselves. But you will never be profitable until you figure that out, until you help yourself to be consistent.
Yeah, that's very, very true. It's human nature, as you said. It's sometimes yeah, people I mean, I can be guilty of that as well from time to time, right? It's
I don't think
difficult
I
to
don't think you can, Victor. Victor, I'm pretty sure that you're perfect. You're perfect when it comes to execution.
no, I don't mean that. What I mean is the it's difficult to allow yourself to be convinced of something different than your beliefs. That's what I mean. I'm
Yes,
guilty
yes,
of
yes.
that
That's
sometimes,
very
right?
well said.
And that is basically what you're trying to do. You're trying to convince the trader, the viewer, that this way is better, while they are not believing in it yet. And it's very difficult to accept something, a new information that doesn't fit your belief system, right? And that's
Yes.
very difficult. And I mean, I'm guilty of that as well, right? Sometimes we tend to be more critical of things that are not part of our belief system, and we tend to be more accepting things that fit in with our belief system, and they may not be true necessarily. right? But we still treat them differently and be more critical of the one that is not according to our belief system. Maybe that's what is true. And that is why, even though you're telling something very truthful and very valuable that will help, everyone listening out there and watching us, the majority will still not execute on that advice because, it's very difficult. As I said, it's difficult to persuade them of something, convince them of something that is not part of their belief system yet.
Yeah, and I think you said something important. You talked about belief system. So in the book Trading in the Zone by Mark Douglas, it's a book that I always talk about. I recommend that everyone read it. It's the book that really made me profitable. Honestly, it's not the system that I'm using and that's just profitable. It's that book that really made me profitable. And he talks a lot about belief systems, like what type of belief system do you have, and how do you function as a trader from your like basically what beliefs do you have about trading, and then you'll find out that most of your problem stems from having the wrong idea about trading, the wrong beliefs in trading, and it's all about creating a winning mindset. And I think taking read that book. Read that book. I think it's a wonderful book. It really explains a lot of the problems that we're facing, and he talks a lot about how you should be thinking to like be able to have that winning mindset. And I can't remember right now how he described it, but it's basically like having a positive. Yeah, I'm not going to try to that quote because I can't remember it, but we'll talk about. We'll talk about that next live stream, maybe tomorrow, because we are running out of time here today. So we're almost at 2 hours, and tomorrow we're gonna have Dirk on. We're gonna be talking the first 30 or 45 minutes. We're gonna be talking about Bitcoin. Both me and Dirk are going to break down our long-term views on Bitcoin. I'm going to show you this very, very nice graph right here. I'm going to break it down what all of this means and how you can get access to these indicators as well. This is basically my trading plan for Bitcoin. Buy green, sell red. Very complicated, but that's what I'm doing for Bitcoin, and that's what I've been doing for the last 7 years on Bitcoin. And I've been riding these trends up and down. I got into Bitcoin around here, and I've managed to ride these cycles up and down, and made some nice money along the way. And tomorrow I'll show you how you can do that as well using very, very simple indicators. And we'll talk a little bit about the possible price target, which is quite high. All right. Thanks for joining today, guys. And thank you, Victor, for being here and asking your awesome questions to Tom and sharing your knowledge with us here today.
My pleasure. Everything we do it for the trader that is trying to become better. So that's my satisfaction. That is our goal. So I'm honored to be able to contribute any way I can.
Me too. It's always a pleasure. All right. Take care, guys, and we'll see you all tomorrow.
See you guys tomorrow.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here.